Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, it's a fresh Wednesday morning and Indian equities fell on Tuesday, breaking a two-day winning streak as investors turned cautious, ahead of the RBI's monetary policy. But what should be your strategy and where are the markets headed? We will discuss this and lots more. But first up, the top headlines for you. Indian stocks are likely to consolidate in a narrow band as weak cues from Wall Street and two major events ahead keep bulls on tenterhooks. Relatively inexpensive sectors such as Pharma and PSUs may see more buying as investors seek value beyond blue chips. And stocks on Wall Street slumped after global rating agency Moody's downgraded 10 US mid-sized banks. Traders now await US inflation data on Thursday, and local bulls remain on the fence ahead of RBI's monetary policy decision the same day. Very good morning, Shail. I think Indian markets fell yesterday and, continuous foreign fund outflows and weak trend in Asian and European markets also played spoil sport for the domestic markets. Pharma and PSU banks, of course, these sectors were, an exception. But where do you see Nifty now and what should be the strategy, ahead of RBI's monetary policy decision?
Good morning, Tanya, and good morning to everyone who's joined us on the show. Both Tanya and I are doing our bit to entice the bulls. I am wearing an absolutely green outfit, and Tanya is dressed up in red. So let's hope this little totka of ours starts to work and bulls return on the last streak. But the fact remains, Tanya, that the mood is a bit of circumspection, of course, consolidation. And there is a possibility that now, given the adverse Chinese data that we've seen coming on the month of July for uh, both exports and imports, which have fallen substantially, we might see the Nifty extending its down range below 19,500. Of course, a lot will depend on how sentiment now shapes up because of two major events slated for tomorrow. One is the domestic event, RBI's credit policy, likely at 10:30 tomorrow. And the second is, of course, the US inflation data, which will impact our markets on Friday. Nevertheless, before that, the entire space in India is in a consolidative mode, both the Nifty and the Bank Nifty, around 20 and 50 DMA respectively. That's what is happening. So a range bound trade is what I see as far as the Nifty is concerned for today and tomorrow. And it will be choppy, it will be volatile, it will be painful. The only comfort that I see is that the index is above 20 EMA, and I'm hoping that it will hold. The other point is that you look at how shorts are building up in the system. So that's a bit of a concern. You mentioned the FI data, and yes, last five sessions, 5,000 crores worth of sales in the month of August. That's painful, both in terms of sentiment as well as the overall construct of the market. So these are painful things that we are looking at. What can be done? It's a event-heavy week, and post these two events, only will the Nifty start moving in either direction. The chain, which is the option chain, suggests that you'll see some strong support emerging around 19,400, and of course the resistance is 19,600. As you can see, it's narrowing very sharply. The difference between high and low for the Nifty as well as the Bank Nifty on a daily basis is coming down, and that basically points to a fact that some move is likely to emerge, either a breakdown or a breakout. That would again depend on what data that we see on Thursday. But the fact remains that you'll see choppy trade on the Nifty, listless and volatile, and it's best left to professional traders. just stick to where the action has been over the last 10, 15 days, a month, which is PSU banks, Pharma, beyond compare, and of course, railway stocks, Tanya. So that's the outlook on the Nifty as far as the index is concerned on Wednesday morning. Tomorrow is T minus, today's T minus one. Tomorrow is also the weekly settlement. Let's hope for the best as far as this index is concerned, whose chart is there on the screen for you.
Okay, absolutely stick to, where's the action is happening. That's the word coming in. And if you talk about Nifty Bank, Shell, this index closed on a positive note on Tuesday. And the PSU banking index, that was the top leader and by a good margin. Shares of Punjab National Bank, Bank of Baroda, Bandhan Bank, State Bank of India, they ended up, as top gainers in the pack. But what should be the strategy, today, if we talk about Nifty Bank?
So, Tanya, that's very well put. Frankly, the Nifty Bank is in a better shape compared with Nifty. And as you rightly mentioned, it's the PSU banking basket that's holding the strength as far as the Bank Nifty is concerned. Although the overall weightage of the PSU basket, banking basket, is not as much as the private sector is. And the same things are happening on the Bank Nifty as well. Narrowing of trading range, which is now 300 points between the high and low intraday of Tuesday's trade. On a normal day, it's somewhere between 600 to 750 points. So that's the issue. And as I pointed out, it's again in a narrow zone between 20 and 50-day exponential moving average. So the Nifty Bank is also seeking direction from the broader market. You can see this wonderful daily chart in front of you. It's squeezed between the 50 and 20 EMA, and again, the direction will come from both the RBI credit policy, where rates are supposed to be held at 6.5%. So that's the situation. The overall data on the option side suggests a narrowing trading band for today, 44,500 at the base and 45,000 towards the upper end, where you'll see some resistances clicking in. Again, like I said, trade is choppy, it's volatile, it's best avoided. Let it be handled by professionals, and people can focus on beating down PSU banks. Although, as you very rightly say, that the PSU banking index was the top gainer yesterday, but that's how the market stands as of now. Nothing, absolutely nothing on both major indices, Nifty and Bank Nifty, and the broader market teeming with a lot of opportunities on the long side. Tanya.
Okay, that's the verdict coming in on Nifty Bank and FNO space. That is the space where the action is happening. Shell. So what are you looking at in the FNO space today?
So, Tanya, first of all, the Nifty Metals Index.
Hmm.
My feeling is that it's going to be a bad Wednesday for the metals pack. We've
Okay.
already seen a 5-day fall in the index. I'm hoping that we'll have the Nifty Metals Index graph in front of you. And it's the Chinese pain that will get reflected on Indian bourses. A fall in exports and imports for the month of July in their high teens. So that's painful. And the two weakest stocks as far as the Nifty Metals Index is concerned are Coal India and, of course, Hindalco. So these are the two that I'm watching on the downside. And as bad luck would have it, you already have shorts getting tied into the system as far as Coal India is concerned. A rise in open interest of about 5.7% and a fall in price of about 1%. This is accompanied by a rise in deliveries. So those are the negatives. Hindalco 2.2% down, open interest up 1.5%, and a mild uptick in deliveries. As far as the broader markets are concerned, Tanya, favorites are Manappuram Finance on the long side. Extremely bullish phase for this particular stock. Nice short covering happening, accompanied by a rise in price of about 5%. So Manappuram was the top gainer yesterday in FNO space. I'm hoping that given the technical parameters and the data that I have in front of me, you'll see a nice uptick again. Minus 2.7 is the fall in open interest. So it's very, very good short covering accompanied by a rise in futures price and a rise in delivery. So Manappuram Finance and then the old favorites, Biocon, I would look at. You remember we talked about it yesterday. It is the second best gainer, 4.1% up. I hope the rally will continue. It's at a place on the technical charts which show a lot of strength. Of course, favorites Punjab National Bank, RECL, and of course Canara Bank. So these are the stocks that I'm looking at, and maybe Chambal Fertilizers too. Very good, strong data, good build up of positions on the long side in these 4 or 5 stocks. Tanya.
Okay, absolutely. That was the F&O data for you. But we also have with us now Mr. Gaurang Shah. He's the Senior VP at Geojit Financial Services. Mr. Shah, very good morning and thank you so much for taking the time out and joining us here on Business Today Television. Let me start by asking you about the market outlook only. I mean, we had seen a stellar run up, but markets are in a consolidation mode right now. And obviously, of course, investors have turned a bit cautious, ahead of the RBI's monetary policy decision. So what's really next for Indian markets and how are you approaching markets at this point in time?
Thank you, Tanya, and morning to all of you. So we had put out our market outlook for the week this Monday at around about 11:30, and we normally do that every Monday. And in that market outlook for the week, we had mentioned that possibly the volatility in the market and the downside in the market would be much less this week compared to what we saw last week, of close to about 3.5% from the top to the low on both Sensex and Nifty. So I think it's basically a consolidation, and it's good to see this consolidation. It gives you a healthy atmosphere. The correction that we saw last week did bring in a little bit of sanity in terms of weak hands and leverage positions getting out of the system. And that brings in a little bit of stability. For the week, and of course, as you and Shail were mentioning a while back about credit policy, which is going to be out on 10th, that is tomorrow. Our view is that it's going to be a status quo. And we would possibly be keenly watching into the commentary of the governor, what he has to say in terms of domestic and global economies. We are facing a little bit of uncertainty in terms of elevated inflation with respect to vegetables and certain food grains are concerned. But I don't think that will possibly make the Monetary Policy Committee commit to making any kind of changes on the higher side. I think they'll wait and watch. So I think market will take it positively. We are possibly at the fag end of the Q1 earnings season. I think we'll be done and dusted by this week and early next week. You will possibly have a little bit of focus on earnings that we have seen, and possibly investors would want to chase those stocks which have exhibited good numbers and wherein the management commentary is very strong with respect to the business outlook. So I think it's going to be very, very stock specific. But our sense is that this is going to be a consolidation week and volatility will be there, but not as much as we saw last week.
Good morning, Gaurang. It's always a pleasure to host you, and especially ahead of major events. Let's get down to brass tacks. You've been a fantastic stock picker, and we've corrected somewhere like 400 points, 450 points on the Nifty from its recent all-time high, and about 2,000 points on the Bank Nifty. Absolutely the right moment to add some quality stocks to the long-term portfolio for creating wealth. What are you looking at, and what looks relatively decently priced at current levels?
So that 400-point correction was just 3.5%, Shail, if you put the perspective where the Sensex and Nifty is, respectively, of course. So it's nothing much. I think it's all done, given the kind of run-up that we had in the entire month of July. In terms of investment ideas, the first stock is from the gas distribution or gas sector, which is Indraprastha Gas Limited. Extremely excited about the entire sector, whether it is Indraprastha Gas, Petronet LNG, Mahanagar Gas, Gujarat State Petronet or Gujarat Gas. Shail, what we have witnessed is that there is slow and steady uptick as far as the volume growth is concerned. Volatility in the commodity market as far as natural gas prices are concerned are coming to a little bit of stable level. And in terms of margins, well, there is entire possibility of margin improvement and thereby translating into a good uptick in the net profit levels. So we maintained a buy call on Indraprastha Gas. This is a fundamental buy call from a long-term point of view. for 540 is the target on Indraprastha Gas. The second one is from the life insurance segment, and we saw the new premium run rate going up considerably. The second investment idea is SBI Life Insurance, has a sizable market presence and products across different offerings. Our view is that the run rate as far as the new premium is concerned will definitely go up because the sum assureds are going up. Target is somewhere close to about 1,470. Both these shell are fundamental long-term investment ideas, and in case if the earnings improve in the quarters to come by, then respectively the price target will also go up.
Right. Gaurang, let's take this one by one. I'll go back to Indraprastha Gas. And as you rightly said, it's a very, very good fundamental stock. I'll just share the 10-year history with our viewers. If you look at the compounding that's happened over the last 10 years, it's a 24% CAGR. Each year, the stock has appreciated 24%, handsomely outperforming the Sensex, which is compounded at just about 13%, as also the mid-cap index, which is compounding at 19%. So Indraprastha Gas, and as very rightly mentioned by Gaurang, you've seen a lot of quality investors getting into it. The book has a cash of about 3,500 crores, and it's a totally debt-free company, market capitalization of about 32,000 crores. And we've seen a high and low of about 550 and a low of 353. That's what we have as far as Indraprastha Gas is concerned. A very decent PE of 19. And as I said, from the public sector space, this has been one of the phenomenal value creators over the past decade. Let's pay attention to SBI Life. Gaurang, a couple of things I wanted to ask. We've already seen a fairly sharp bounce coming onto this one, 1252 a couple of days ago, 1349. I'm presuming this is the all-time high. Yes. What are the two or three things that you like fundamentally as far as SBI Life is concerned? Of course, the parentage is phenomenal. And if you see the volume yesterday, we clocked somewhere like 35 lakh shares, which is the highest so far from February.
So, Shail, I think the couple of things as a person who would want to take a life insurance would look at is what is the credibility of the company, which of course, like you rightly mentioned, it is extremely high. What are the products offering, which is of course diversified. And more importantly, what is the settlement run rate? I think if you look at all these parameters, I think the comfort level automatically draws for any individual who want to possibly take a life insurance cover, a term that is, and a sizable. Secondly, post the pandemic shell, I think the entire approach towards insurance products have changed from being a tax saving product to a product which possibly secures your family members and dependents in case, God forbid, if something has to happen to you. So people have changed their attitude towards taking an insurance product. And I think the younger generation shell are now even becoming more aware as to how important a term insurance or a mediclaim insurance is, medi insurance. In terms of numbers, extremely excited about the numbers which have already come through and which are likely to come through. And being a sector which has got tremendous amount of potential given the number of the large population that India has compared to the number of individuals who have taken a term insurance or a life insurance is extremely, extremely low. So there is tremendous scalability in terms of growth,
right,
and ensuring the uninsured is the next theme. So these are some things that we are extremely positive about.
Right. Let me just get the chart back on the screen. A couple of things I wanted to mention. Remember, this is the 5th year of SBI Life's listing in front of us. And over the past 5 years, the stock has compounded at about 14.5%. It's ahead of the Sensex in terms of an 11% CAGR. And of course, the BSC Finance Index, which is compounded at 9%. So outperformance there. The only issue that I see so far is that the current PE is 73. But if you look at future projections, I'm sure this will come down. and the fact that somewhere in September of 2017, the stock listed, the IPO price was 700. So it's more or less doubled over the last 5 years. So it gives you a compounded CAGR of about 14 to 15%. So these two stocks, these are, remember, long-term plays in your portfolio. Extremely good quality picked up by Gaurang, Indraprastha Gas, and of course, State Bank, SBI Life, the insurance arm of India's largest banking giant. Tanya.
Absolutely, Shell. But I think we should talk about global markets as well. All three major Wall Street benchmarks finished lower on Tuesday in a broad sell-off after the downgrading of several lenders by credit rating agency. The Dow, closed 158 points lower, and still, that's better than where the Dow was at session lows when it declined about 465 points. The S&P 500 also fell by 0.4% and Nasdaq Composite slid by 0.79%. Asia Pacific markets, if you see, they are trading on a mixed note as investors look to, China's inflation figures for July, with the consumer price index predicted to enter deflationary territory for the first time since Feb 2021. Oil prices edged lower on Tuesday after data showed that Chinese crude imports and exports fell much more than expected in July, in yet another sign of a sluggish post-COVID rebound. So, Shell, what is now essential to track from overseas cues?
Tanya, as we discussed earlier, I'm just not concerned about the broader markets, at least till Thursday, and of course Friday morning. I'm only looking at stocks which during the day are offering nice volatility on the cash side. That's Pharma, that's Railway, and that's the PSU banking sector. But we have Gaurang. Why waste breath on our part? And let's ask him. Gaurang, your top pick on the Pharma space and why?
So, Shall, I think yesterday and a couple of days back, we did see a little bit of performance coming back into the pharma. I was also reading an article wherein a new avatar or a variant of the so-called gift from China, which scared the entire world, has come in and creating a little bit of problem. So you had a little bit of action coming back in the pharma. But I don't think it's going to be back like second half of 2020 or early part of the 2021, wherein you saw outperformance from pharma index. So we have, I'll not one, but we have got four of them. One of them actually has kind of come to a target levels where we had set aside because of the news flow, and that is Cipla. So I think Cipla, you would possibly will just want to wait out on the sideline. But the other three names would be Sun Pharma, Divi's Laboratories, and Dr. Reddy's. I think these three names would relatively outperform the other peers in the pharma universe and the pharma index. Reason being the kind of opportunities that lie ahead of them. But again, I would add a pinch of salt over here because it is necessary, Shell. Still, the red flags have not come down. The number of red flags have not come down as far as observations or shortcomings in the manufacturing process is concerned, and that's a little bit of overhang or a concern on the entire pharma universe because you have a bad name on one name and the entire pharma sector goes for a toss or out of the window. That's the sad part.
Right. So, Gaurang, as good a time as any to check the pre-open trades, and I think my green tie, your good wishes, and Tanya's red jacket have worked wonders. We have a green tick on the Nifty, up 28 at 19,600. So the battle for today will be concentrated somewhere between 19,500 and 19,600. A good time to look at where prices are, and at the moment, the Nifty is at 19,594, 23 points higher. The market is paying very good attention to what Gaurang is saying. Cipla is the top gainer, 4.7% higher, 1275. Remember, this is a record high for the counter. But let's shift focus apart from Cipla to where we see a lot of action coming in. Reliance has a downtick. Let me not share the price with you. Let's look at other places where we are seeing a green tick. Adani Ports, strong numbers coming in, 1.3% higher, 795. SBI Life, 1.2% higher, 1365. As I said, The market is listening very intently to what Gaurang is saying. M&M 1.2% higher, 1518. Let's look at the FNO space. The Nifty up 43 at 19,618. What is ticking very well? Vedant 2% higher, 245. It was beaten black and blue, so a swing trade probably in the works. Tata Power 238, 2% higher. LTTS strong follow up happening, 1% higher, 4309. I see Torrent Pharma fresh record high, 1% higher, 2061. Nifty now flattening out, just 4 points up, 19574. Let's look at the index heavyweights, which might have settled now. I'm just wanting to look at major prices in terms of where the good traction is. So I'll just tell you the percentage dip. It's Infosys down 0.7%, ICICI Bank down 0.2%. I'm seeing a green tick on State Bank of India 0.7% higher, and L&T's 4.6% higher, 2763. HDFC Bank in the green, 4.4% higher, and Kotak 4.4% higher. Let's broaden the scope of this market, and let's look beyond the Nifty and the FNO stocks. I'm going wider at my NSE 500. Yes, okay. Gland Pharma, after yesterday's stunning 20% rise, another 2.5% uptick. SBI Life 2.7% higher, 1386. FDC 400, this is a pharma space, 2.5% higher. Latent View 1.7% higher, 386. So this is what we have in pre-open trades. Nifty now 10 points higher at 19,581. We'll let it settle. Let's look at what Tanya has on her plate.
Absolutely, Shell. So Jet Airways, that stock should come up on screen. So the company posted its numbers yesterday, and the net loss narrowed to 50.7 crore for the first quarter, and revenue also came in at 37.6 crore rupees. So let's look at the stock. So this stock will be in focus, on the back of the Q1 earnings, and then of course Siemens also on the back of Q1 numbers. The net profit was up 52%, while revenues jumped around 14%. And then we have Tata Power also, and IRCTC and Max Financial. So these stocks will be in focus ahead of their Q1 earnings. So keep an eye on these stocks as well. But let's do one thing, Shell. Let's welcome Vaishali as well. She is also with us. So Vaishali Parekh, who is the AVP of Technical Research and Analysis at Prabhudas Lilladher, she joins us now. Very good morning, Vaishali. And markets in a consolidation mode, and obviously investors have turned cautious, ahead of the RBI's monetary policy decision. But what do the technical charts now suggest for the Indian markets, and where are the markets headed going forward?
Very good morning to all of you, and thanks for having me on the show. Yes, so market, as far as the index is concerned, we are seeing a sideways move, and we still continue to see sectoral or stock-specific movement. So I would still maintain my view that 19,450, 19,500 should act as a very prominent support band, and 19,700, 19,800 continues to be the resistance. So let's wait for a trigger. Either ways, that will be a decisive view for the market.
Right. Vaishali, good morning. And it's a pleasure to host you on BTTV. Let's get down to brass tacks. Your two stock picks for today.
Well, so as just I heard you guys are talking about Pharma Pack. So in that, I like Biocon right now because we have been recommending this stock right from 259 to 60. So I continue to stay bullish on this to be bought at every decline, because as a trading strategy, I would be looking at a target of 290. And people who have want to take it as a positional trade, I think the stock is ready for a target of 320, 330 as well. So 250 acts as a very good support base. And Biocon, if you see in whole of Pharma Pack, has really not participated to the extent the other stocks have. So Biocon would be one of the stocks. And second one, what I'm looking in the mid cap is Suntech Realty. Suntech Realty, yesterday's move, we saw that yes, it has shown a very good, strong bullish candle. It's getting ready for a new round of momentum. So I would say 355 would be the support level, and I would be looking at a target of 440. So both of them are my positional trades, and these would be my recommendation for today.
Okay, absolutely. And what about Cipla, Vaishali? This stock was, among the top gainer yesterday, and we have seen a stellar rally in this counter, and especially after stellar Q1 numbers. What do the technical charts suggest for this particular stock?
Well, I would say cautiously positive because we are already in overbought, and I'm seeing the longer term time frame also. So the stock has already given a breakout. So I would say that 1180 should act as a stop loss and continue holding. In my opinion, no harm booking partial profit also because we've seen a good rally upward, and maybe if market supports us and we continue to surge high, then the stock could go towards 1320. So either put a trailing stop loss or book partial profit and ride on for the next target.
Yeah. In the same thread, Vaishali, if you could peep into the charts of Manappuram Finance, a very, very strong traction coming in. Yesterday, it was the top gainer in the F&O space. What are the charts telling you?
So yes, yesterday we saw a good decisive breakout again happening. So I would say it's a buy at every decline. I would say 130, 135 should be the support level. And as a positional trade, one can look for a target of 160 to 170 from here on.
Right. Let's get Gaurang into this conversation. Gaurang, anything you would prefer, on the NBFC space? Of course, the big boys are clicking Bajaj Finance, M&M Financial Services. There is an impending launch of Geo Financial's overall business. That should be a game changer for this sector. But what are your top picks in the NBFC space?
So I think other than the Bajaj Finance of the world, Cholamandalam and Shriram would be the two other investment ideas. Amongst the smaller boys who have started to perform because of certain, corporate changes is L&T Finance and Holding. If you want to look at rural themes, then I think M&M Financials, which otherwise was an underdog and an underplayer in this entire NBFC universe over the last 6-8 months, have performed extremely well. So I think these would be this, few investment ideas as far as the diversified NBFC business is concerned.
Yes, absolutely, Shriram Finance. Let's get Vaishali's view in. We'll draw a long-term chart for Shriram Finance for you. And extreme relative undervaluation that you see on Shriram Finance should explode on the charts in at least the short term. Your view, Vaishali, on Shriram Finance, already near record highs, 1861, but relatively underpriced given the competition and its own long-term valuations.
Yes, so I think it is, the beauty of it is on a daily chart, I'm seeing it as a gradual consolidation and we are surging high. So view still continues to stay positive, but I would say keep a stop loss of 1790. And I think the stock can, for a near term basis, go to 2000, 2100.
Okay. Tanya, I'll just go through the numbers that have come up post pre-open. So among the stocks that we are watching, of course, Manappuram, it's a breakout of a monthly high. The stock settled around 144.75. Laurus Labs, remember, this is a very high beta counter in the pharma space. Near its 200 DMA, 413 is where it's settled. Then we have Muthoot Finance, the larger rival of Manappuram Finance, 1370. And of course, we have PNB Housing. This is again a high beta counter, 638.40. It's a weekly high that it's seen. So these are the stocks that have settled in the green as far as markets are concerned. And like I said, my green tie and your red jacket have worked wonders. Markets were supposed to open with a gap down. We have a green tick here, 8 points higher on the Nifty, 19,578. Tanya.
Absolutely great, Shail. But I think I should ask Vaishali about SBI Life as well. We were discussing this stock earlier with Mr. Shah. But what do the technical charts suggest for SBI Life, Vaishali?
I'll just have a look.
Yeah.
So yes, SBI Life, I think it continues. It's got into new round of momentum, and it's well above the breakout levels also. So now I'm seeing the weekly chart, and I think on a weekly chart also it's given a breakout. I would say it is a positive bias, and it can go towards 1450 for now.
Let's get Gaurang back into the picture. Gaurang, there is no let up in the rally that is across the board in the railway space. Anything that catches your fancy over the longer term, still underpriced relatively to their own valuations. What do you like in the railway space?
So let's focus why the stocks are in limelight, and that's purely because of the government policies and the announcement made by the railway ministry and of course the respective authorities. And Shell, if you're going to talk about seeing 400 Vande Bharat trains running on the tracks of Indian Railway network, I think it's going to be a tremendous opportunity. Along with that, you have replacement of old coaches with the new light coaches that we've seen on the railways. Uh, you're talking about dedicated freight corridors. You're talking about connecting more uh, rural and semi-urban parts of India where the connectivity is not there. Graduating from semi-speed corridors to high-speed corridors. All these are going to add tremendous amount of value for all those companies which are associated with Indian Railways, be it government or private. So I think we what we liked was, in fact, on the IPO front, IRFC was one stock where that we had given a recommendation to subscribe to the IPO. IRCTC also the other name that we had given a subscribe recommendation for the IPO. And I think some other names wherein it's not a recommendation, but I looked at the balance sheet share. They're extremely extreme, whether it is Railtel, whether it is Titagar, or whether it is, Rail Vikas Nigam Limited. All at most importantly, I think if you're putting all these, developments that are happening in the railways in mind and investing, then you need to have a longish time horizon. I'm not able to comment directly, but most of the balance sheets are extremely strong.
Right. Let's get Vaishali's view on IRFC. This is one pick that Gaurang likes. Uh, IRFC for you, Vaishali, very strong bump up over the last 3 or 4 trading sessions. A record high is where the stock is consolidating around, opens at 49. Would you hesitate uh, to take a long punt here, or it's overheated?
I would definitely not make a new entry at this level, perhaps wait for a decline. And like how all rail stocks are surging so high, so positive views is maintained, but definitely not a buy at these levels because we've seen just a one-way move coming in right from the base of say 30, 32, and we are at 50 levels. So it's a perpendicular rise, dangerous to get into at this level.
It's a very fair comment. Just stay away, let it correct, and then we'll move into it. Ladies and gentlemen, the markets have opened. It's a flat opening on Nifty, 19,561. Nifty Bank about 100 points lower, 44,850. Now the Nifty ticking in the red, 20 points lower, 19,555. Let's look at what is causing this pain. ICICI Bank 0.5% lower, 974 amongst the heavyweights. Infosys a third of a percent lower, 1384. Reliance down 4.22% at 2503. And what is HDFC Bank doing? Down 0.4% at 1646. The Nifty down 24 points, 19,550. So if four heavyweights on the index are in the red tick, there is really no reason why you would see some kind of flourish on the green side. Apart from that, what's in the green? Bajaj Finserv, 0.5% higher, 1525. Bajaj Finance flat at 7181. State Bank of India flat at 573. Nifty now down 26 at 19544. Let's shift focus and get into FNO. What are the top gainers? Surprisingly, Coal India, 1.5% higher, 233. Adani Ports, let's look at high beta, 0.5% higher, 788. Tata Power and Hind Copper in the green, 1.3% higher, 0.5% higher on Tata Power. Let's look at the losers side. Tata Chemicals, this is a weak stock, 1.5% higher, now below the four digits at 994. Tanya, I am also looking at high beta. Those are the ones that define sentiment in the market. Let's look at those which are rising. BHEL 1.3% higher, now at 100 rupees. Manappuram Finance 1% higher, half a percent higher at 145. Bombay Stock Exchange BSC 1% higher, 890. Delivery half a percent higher, 413. Which among the high beta stocks are on the lower side? As a percentage fall, Policy Bazaar 2.5% lower, 741. Paytm half a percent lower, 825. Ambuja Cement half a percent lower, 464. Zomato half a percent lower at 93. Again, the Nifty is now vacillating between a loss of 15 points and 25 points. The Bank Nifty down 71. What else is sticking in the green? Dixon Technologies. I'm seeing a lot of blocks happening here. BEL in the green. Let's look at the defense space. Again, I'm not seeing any major gainers here. MTAR Tech 1.6% higher, 2300. BDL 1.2% higher, 1128. VEL a percent higher, 130. Mastock 1% higher, 1833. This is what I see, Tanya. The Nifty flat, 19,555. Bank Nifty flat as well, 44,880. What are you picking up on this Wednesday morning?
Shall I think we should look at Gland Pharma as well. We mentioned that stock yesterday as well. It was up 20% yesterday and it is still up. I mean, the rally is just unstoppable. It's up 7%. Vaishali, I want to come to you for this particular counter, Gland Pharma. We have seen a stellar rally, of course, after the stellar Q1 earnings. But what would be the right buy zone for this particular stock?
Well, so the ideal buy level actually was from 1100 levels, and we've seen a good surge. But now I think 1450 would act as a good support level. That would be an ideal level to get into this stock because we see that it has moved past the resistance level for now at 1600 levels, and I think it's ready for a takeoff to go towards 1800 or so. So 1450 would be an ideal level to get into the trade.
And what about Dixon
Let's look at
Technologies?
SBI Life.
Yeah, sure. Please go ahead, Shel.
Tanya, let's focus on the stocks that we had chosen.
Absolutely.
Gaurang's pick, SBI Life, running away. I think it's a fresh record high that we see on the counter. The last price I saw, yeah, it's a gap up and 1370. One of the top picks that Gaurang just mentioned. Now, of course, this would probably be overheated, but let's take Vaishali's view on SBI Life. Fundamentally, is what Gaurang likes SBI Life. Vaishali, would you put in your two words as far as what the charts say?
So I just said that yes, looking at the weekly chart, we just saw the breakout happening yesterday. So view is positive. I would look at a target of 1420, 1450 for now.
And the entire pharma space is abuzz with gains. Let's look at what it is doing. I see a lot of index heavyweights in the pharma space, doing pretty well. So, Tanya, we have 22 pharma futures and options stock futures, and 20 are in the green. So, again, it's a pharma rally. I see Torrent Pharma at a fresh record high at about 2085. Aurobindo Pharma, Lupin, and of course, Granules. Let's touch base with Vaishali. Vaishali, this is one sector that's really gladdened the hearts of investors over the last 2 weeks or so. Anything? What would be your top pharmaceutical pick, which is really buzzing on the charts?
So, well, we have been recommending Aurobindo Pharma since quite some time. So, we maintain a positive bias for a target of 1000. But, like I said, the opportunity to get into the stock right now is Biocon.
Absolutely. And that's a fair point. You see, the rally has been very fast and very swift. So the best you can do is if you are in the stock, keep on trailing your stop losses higher as the price improves, or wait for a good correction when it comes to stocks, very high beta stocks such as Aurobindo Pharma. Of course, Vaishali also picked Biocon, that's doing pretty well. And I think we have a record high on Dr. Reddy as well. Just a moment, please. Yes, 57.65. Yes, it's a fresh record high on Dr. Reddy's. Let me at the same time tell you what are the other stocks that are in record high territory. And Vaishali, would you believe it? There are four stocks on FNO which are on record highs. Three of them are in the pharma space. Dr. Reddy's uh, almost 2% higher, 57.50. Cipla flat at 12.67, nevertheless a record high. Alchem Laboratories 1% higher at 41.60, and of course SBI Life, which we've already discussed. Let's dig deeper and get into the broader NSE 500 index. So it's Dr. Reddy's, Cipla, and Alchem. Apart from that, of course, there is another favorite that Gorang has often discussed, which is Praj Industries. Praj at a record high, Gorang. What would you think about it fundamentally?
So I think it was, if I'm not mistaken, this week on Monday when I read a report that the target of 12% blending of ethanol with fossil fuels like petrol and diesel is almost achievable because we've touched a mark of 11.77 ethanol blending till date. Ethanol prices, if you go to see Shell, have moved up north considerably, which is again extremely positive news for these for companies like Praj Industries because they are, one of those pioneers in the monopoly kind of situation as far as creating the infrastructure environment for enabling sugar companies to make ethanol. It's got an extremely strong balance sheet, undoubtedly. And of course, the future looks quite bright because the government is targeting a higher level of ethanol blending as we go forward into the future. So there is tremendous amount of opportunity for Praj Industries. But the only problem is that the stock has rallied to a great extent. You might see a little bit of cool off. Otherwise, long term, the balance sheet is extremely strong, and the order book also looks quite visible.
Okay, Mr. Shah, let's talk about IT stocks as well. I mean, Tech Mahindra and Wipro, they were among the top gainers yesterday. And Birla Soft, we should pull up that stock for you. What are your thoughts on entire IT pack, and specifically, if we talk about mid cap IT, because I think street is still divided. So, is there more pain left for IT companies, or is the worst really over?
Tanya, I'll try to be the devil's advocate over here, and let me say this. Even last year, we had a situation when the market or large part of the market participants were underweight on the IT sector.
Hmm.
Then suddenly you had the third quarter earnings reported by, I'm talking about last year, last financial year. Last financial year, third quarter earnings were reported, and almost each and everybody on the street was saying, now is the time to buy IT stocks. We remain positive then, we remain positive now. We are absolutely on the same platform as other, concerns with respect to 3 to 6 months of difficult time going forward from here on. But if you're not looking at short to medium term, and if you have year and a half plus kind of time horizon, I think given the opportunity, price correction, valuation, you should not ignore IT sector. And I think IT sector should at least be a 15 to 20% kind of an exposure in your portfolio. We like mid cap IT because they have outperformed to a great extent compared to the earnings and return on investment is concerned, ROIs. So we like Persistent System, we like Mindtree, we like Science Limited, Coforge, KPIT Tech, Tata LXI, to name a few. LTI Mindtree, uh, HCL Tech, Tech Mahindra, TCS, and Infosys. That would be the order of preference.
Okay, absolutely. And what about you, Vishali? Your take on Birla Soft specifically, and any other top picks from this particular space?
Well, I'm totally in agreement with what Gaurang has just mentioned because, in my understanding, of course, IT sector is never going to go out of fashion. So these are all the frontline as well as the mid cap. Now, talking about Birla Soft, it has already given a very good rally, but that does not mean that we met with the target. It would be a buy at every decline because positionally, if I'm looking at the chart and all, I won't be surprised the stock going towards 500, 520 levels. So my view would be on a broad basis, 380 would act as a good support, 380, 400. So keep accumulating these stocks. In fact, even I'm focusing on LTIM and also emphasis, persistent. These are few of the chosen ones which I would be recommending. So I am bullish on these stocks as a positional. It would give definitely good returns from here on.
Okay, and also Vishali, a quick take on Lupin as well. Of course, pharma sectors, this sector has been buzzing, and Lupin is at a fresh 52-week high. 1106 is the level where we are at. Your thoughts on Lupin, and what would be the right buy zone?
Well, we've moved past that. We've missed the boat for that for a fresh buy, but continue holding because 1200 would be the target. And I would recommend a buy right now. Definitely not. If by chance you get it at around 950, 980, that would be still a reasonable buying trade.
Okay, Lupin, by the way, is up 64% in just 1 year. And Vaishali, your take on Jupiter Wagons as well. We'll be talking to the management also in a bit. But this stock, the company posted bumper set of numbers, I would say. The net profit jumped almost fivefold, revenue also jumped 155%. So is there more steam left after the stellar Q1 numbers, Jupiter
Hard to
Wagons?
tell. Really hard to tell because it's given really a one-way rally and we are in the deep overbought. So I would say no harm booking partial profit from here on. At the most, I would say that we still see an upside of 260 to 70. So I mean, take your call. Not at all a buy, but wise to book profit from here.
Okay, Tanya, let's now pay attention to the broader market. Bombay Stock Exchange, as I had mentioned to you, these are high beta stocks. Taking it away, I've seen a high level of 915 on the stock. Again, as very rightly Vaishali would say, this is not the price to enter. And of course, if you have it, this is not the price to sell. The all-time high for Bombay Stock Exchange is somewhere like 1034. Remember, the stock is also having a buyback open at the moment. So that's the price that I'm marking. Almost 9:30 now. Let's take stock of the first 15 minutes of trade. Nifty slipping further. It was a fiat, which meant that it was a false hope that you'll see a green tick. Now down 44, 19,525. Pain exceeding on the bank Nifty. Losses are double that of Nifty. 250 points, half a percent lower at 44,705. What is causing this pain? Tanya, in terms of the technical chart, the first support on the Nifty 19524 is now being tested. Let's look at the heavyweights where you can see the maximum pain coming in. In terms of percentage fall, it's ICICI and Reliance contributing the maximum pain on Reliance on the Nifty. Reliance down 4.7%, 2491. ICICI Bank down 4.9 at 971. Uh, then we have slipping in trade and causing this pain. ITC is down half a percent, 450. And of course, HDFC Bank is down half a percent at 1642. Vaishali, coming to you. ITC, we've seen glorious days for this stock. The counter, fairly recently hit an all-time high of 500 rupees. Where do you think a buy zone is emerging on ITC? 450 in front of you, and this is the lowest level since 30th of June. Uh, where would you sort of step in and start buying in a SIP format for ITC?
I think so. The near-term support comes at 440, but in all likelihood, this can still correct further towards 420 levels. So a band of 420 or 440 would be the level that I would start doing my accumulation.
Gorang, would you want to step in on ITC? It's been one of those lovely wealth creators, and you've spoken about it consistently from 180 to 220. not to exit, keep on adding. Of course, a bit of a profit booking, but then that's life. 450 for you on ITC.
Well, first of all, I must compliment on you on your memory, Shell. I think आपने बादाम बहुत दबा दबा के खाई होगी.
Okay, first you answer and then I'll tell you the secret.
You're absolutely bang on. 180, 200 was the level that we recommended ITC. And I think I had devoted a song also to this particular stock. But nevertheless, I think we upgraded our targets upwards and has been a stellar performance. I think what the news came out with as far as the hotel business demerger was concerned was awaited, but in the form in which it is getting demerged is what market did not like, and you saw this correction. I think sub 450, your downside is absolutely protected for ITC. It's a great opportunity for all those people who missed out the opportunity. 520 to 540 would be the initial very conservative target, if I can put it that way, Shell. And I'm sure on the earnings front, we will revisit and upgrade it. On to you, Shell.
Okay. I just wanted to say that due to some quirk in my brain, and maybe it's just eternal grace, I remember every single stock that you or anybody would have discussed at a price point you would have mentioned, whether it's JK Lakshmi Cement, JK Cement, ITC, and so many others. But the fact is that the moment the stock comes in front of me, I'll go back in my mind and bring out whatever stocks that you would have discussed 5 years ago, 10 years ago. It's just grace, I believe. And it's been very, very helpful in tracking markets and, of course, asking the right questions. The index slipping further, Tanya. I don't think so. My dark green tie or shirt has been of any help. Uh, the first support is broken, and now it's 19,500, 63 points lower on the Nifty. Let me tell you how the advanced decline stacks up as far as the Nifty is concerned. So out of the 50 shares, it's almost even Stevens now, 24, 26. So 1:1 that's coming in. Let's look at the broader market in the F&O space. Again, 98 is to 89. So I think the selling pressure is coming on frontline counters only. But one stock that's done fantastically well on the earnings is Adani Ports, and just the right time to get in a view from Vaishali on Adani Ports. Fairly okay chart, Vaishali, sideways trend and around 200-day DMA. Would you hazard a guess on Adani Ports?
Well, so people are very wary of getting into this stock, but well, I would say contrarian. I mean, having a disciplined bias, I would say 745 is the stop loss, and ride this stock, and I think we are heading towards a target of 900. So for a change, I would say yes, buy for now.
Yeah, one of those rare stocks which is around 200 DMA and has a very strong balance sheet. And therefore, you can probably stick your neck out and say, at least take a punt. Vaishali, these days, either it's a crisis of plenty, stocks that any one of us would have identified are, above 5 EMA. Where can you get in at those levels? And only those are rising. You mentioned Lupin, you mentioned Birla Soft, so many of them. So if you're riding the rally, just stick around, keep trailing the stop loss higher, closer to the current market price, and pray that the rally continues. And if you haven't participated, well, then pray for a very nice, decent correction so that you can get into the charts that Vaishali talks about. And she's going to give you a view on CDSL. Vaishali, over to you. Bombay
Yes.
Stock Exchange and CDSL moved lockstep. What do the charts tell you?
So as far as Bombay Stock Exchange BSE is concerned, I just mentioned that yes, we are looking for a target of 1,000, but CDSL in that regard has not really participated to that extent. I would say I would still buy this stock with a stop loss of 1150, because in all likelihood, the way we are seeing the trend picking up, this can go towards 1400 levels. So I have a positive bias on CDSL to buy, whereas as far as BSE is concerned, I would say hold.
Okay, absolutely. And Mr. Shah, let's talk about some pockets, of opportunities and any sector, underrated sector or a contra bet that is worth taking at this point in time where the risk reward, is really favorable.
So, Tanya, we spoke about IT, metals and cement would be the other two, but one sector that I think we've not discussed this morning is defense. And our sense is, of course, I wouldn't be specifically targeting a particular stock, but there are quite a few, stocks in the defense, whether it is government or private, on which we had come out with a IPO recommendation when the fresh paper was hitting the market, likes of Hindustan Aeronautics, like of Bharat Dynamics, Masgaon Docks, Ocean Shipyard, uh, BEL as a matter of fact, then likes of L&T and Bharat Forge. Uh, our sense is, Tanya, that though we have seen a considerable outperformance over the year and a half, we are seeing a little bit of consolidation because of some large funds have exited, and because of that, you're seeing lower levels. But look at the opportunity over the next 3 to 5 years. Look at the order book and look at the possibility of this order book growing because of domestic orders from all the four armed forces, that is border security force, army, navy, and of course the air force. Uh, Abroad, good amount of orders coming through from overseas market as well. So, and I believe with the help of government policy and prohibiting number of items to be imported and concentrating in make in India and made in India, defense FDI is going to be a huge benefit to all these defense companies. Only thing is, have at least 3 to 5 year kind of time horizon, because it takes time to execute the order book, because they are high complex and high precision and high technology oriented orders, and which may take time to execute. But once executed, I think you are bang on as far as your investment is concerned.
Okay. Let's, Tanya, focus on one stock which I've been wanting to ask for a long time from Gaurang. Uh, the PCR will fire a long-term chart of UPL. Remember, the earnings were disappointing, and this is one of the most underperforming stocks on the Nifty. The price that you see, 607, is the lowest that we've seen from April 2021. Uh, One, Gaurang, your view on UPL, an all-time high of 872, the stock at 605, and it's been the worst performer on the Nifty, down about 21% year on year. Is this a level to get into? Are all the bad news priced into it?
I hope so, Shell, because again, very disappointed. We have a coverage on UPN, and the downtick in terms of numbers or percentage with net profitability and the top line numbers. And unfortunate part is that I did not get an absolute clarity from the management when it came to why or what were the reasons why you had such a huge downtick. It was not convincing for me. So your question to answer, well, if you have 2 year kind of plus time horizon, and if you are a hardcore fan of agro specialty chemicals and UPL, you may jump into it. But I would say that just wait out for a while. Let the second quarter earnings come through. If you are of a high risk investor, you can definitely take the plunge. Otherwise, would wait for second quarter numbers also to give a little bit of clarity, because what clarity and justification that was there did not convince us. But like I said, disclosure, we do have a coverage and we do have a buy call on UPL.
Right. Since it's very rare to get a top quality stock trading 20% lower on a year basis, that's the reason why I asked Gaurang. For longer term investors who really specialize in buying the pain, probably UPL offers an opportunity. Remember, on a 1 year basis, there are only four stocks in the Nifty which are in the red, UPL being the top loser, down 21%. Especially, what are the charts telling you? Let's look at a medium to long term projection. The price that you see, of course, is the lowest since just a moment. It's the lowest since April of 2021 on UPL.
So UPL, yes, we are seeing weak bias, but currently it is at a support level of 600. But I won't be surprised if this stock drags down further to 580 levels. So I think not in a hurry, but let it still get corrected. It is quite likely that it can go towards 580 levels. That would be an ideal level to start accumulating, because the way I'm looking at a chartical projection is that even if we break 580, in all likelihood this can do 540, 550. So I would say not in a hurry, but start accumulating. And in fact, I was wanting you to ask me this question because I am, besides the other sectors that you asked, Gaurang, I would definitely look at chemical sector, and of which I am looking at SRF, Deepak Nitrite, even Naveen Fluorine. These are the stocks which have not really participated. So I would look at these stocks, and UPL not in a hurry. I would still wait for some confirmation.
Right. And at that point of time, we'll have to let Miss Vaishali Parekh go. Uh, Thank you so much, Vaishali, for your time.
Pleasure.
And I'm sure a good buying zone, 580, 550, will emerge on UPL. And 1 year from now, we'll be looking at a 25-30% jump in price, hopefully, if the quarterly earnings turn around. Very bad days for agrochemicals and specialty sectors. Apart from UPL, you've mentioned the absence of performance on Naveen Fluorine, SRF, Deepak Nitrite, all of them undergoing the same pain. Nifty days low, 65 points lower, 19,500. We are touching the lower end of the range as far as this particular index is concerned. And we are waiting for Mr. Vivek Lohia, the MD and chairman of Jupiter Wagons, to join us. Remember, the company announced a stunning set of numbers. We'll analyze how the coming quarters are looking at. But for the moment, let's look at stocks which are ticking in the green. From the index space, we have Bharti Airtel, the counter at day's high 891 is what I see, up 0.6%, mild uptick in the price. No other good news coming in from the Nifty, but of course the high beta counter KPIT now rising in sync with its smaller peer, which is Birla Soft, fresh record high coming into KPIT at about 1156. What are the other stocks that are ticking? ABFRL was beaten down very badly about 2 3 days ago, down 5% over the last week or so, now at 20571. So these are the prices that are coming in. Of course, another high beta stock is Jindal Steel and Power. It's ticking very well. Fifth day of gains, 668. Remember, consolidating near 52-week highs. Tanya, what are you looking at?
I think, Shell, we should get Mr. Shine and discuss, some of these new age tech companies. They were in focus yesterday as well. PB Fintech, Paytm, Zomato. Zomato, it had a stellar rally, of course, after stellar Q1 earnings. But Mr. Shah, what is your take on this entire space? Has the tide really, turned? I mean, is it really the right time to step in now?
So the Paytms of the world, we have seen our targets come by, but one company in this particular, new age unicorns as we call it, Zomato, stellar set of number, and I think the commentary from the management was that along with Zomato, the grocery delivery platform that is Blinkit would start contributing to the top line to a great extent as we go forward. So on Zomato, I think it was just about yesterday or day before yesterday, post the numbers, we have increased our targets to 114. It did achieve our earlier targets, where it is trading right now. But we believe 114 could be seen. It may take time. One needs to be careful and cautious because we know the floor price of all these companies. We know the listing history, and we
Right.
also know the downfall after that. So need to be a little bit careful.
Uh, so that's as far as price checks are concerned. Let's now shift focus towards the corporate part of market, and we welcome Mr. Vivek Lohia. He's the managing director and chairman for Jupiter Wagons Limited. Mr. Lohia, what a day to have you with us. A circuit limit on the upper side for your stock, a record high, and that's because of the stunning performance that the company has come up with. Net sales up 155% at 753 crores for the quarter gone by. Uh, Quarterly net profit up nearly 4x, 62 crores. EBITDA up 2x, 99 crores. And the stock has given a return of 278% over the last 1 year. Mr. Loya, you would be a very happy man today.
Yeah, thank you and good morning. Uh, yes, and honestly, this is in line with what we have been saying for a long time. So this in this sector, this change was overdue, and we have been seeing this over the last 4 5 years. The government has been consistently focusing on infrastructure, and especially the railway side of the infrastructure. Because as
Right,
you are aware, in today in India, logistics costs are the highest. We are about 14%, and if we want to achieve the 7 trillion, the 10 trillion economy dream, we need to bring it down to single digits. So, and railways is the only instrument through which I believe it's possible, because waterways in India has certain
right.
limitations, and
Let
the
me just
cost effect. Yeah.
Yeah, let me just give a brief background to our viewers on what Jupiter Wagons does. Uh, in the broader sense, it provides mobility solutions, but in the practical sense, the entire railway universe, which is really ticking very, very strongly on the charts, is the reason why you see this a wonderful smile on Mr. Loyer's face. The company provides passenger and metro coaches, designs fabricated bogies, uh, offers covered flat hoppers, containers, and special purpose wagons, and has been the lightning rod, if one can say that, for the railway sector. The market capitalization of Jupiter Wagons is something like 9,300 crores, and we've seen the earnings, the trailing 12-month earnings at 170 crores. Let's get down to brass tacks, Mr. Loya. You've had a fantastic quarter. Now tell us, what do you see over the next 2 quarters? How strong is your order book? And where is the company headed for the second half of the financial
Okay. So in terms of order book, today we have a order book of close to about 6,000 odd crores. And primarily of that order book, there is a lot of private sector orders, which are typically they are higher margin, and the delivery times are much quicker. So, and if you see our numbers over the last year, we have increased capacities. So last year we were doing on an average about 300 wagons a month. Today we are doing about close to 600 wagons a month. And our target is that by end of this year, we should be achieving a capacity of close to about 800 wagons. And going forward next year, we want to do on an average about 1,000 wagons a month. Now, on top of this 6,000 order book, uh, again, we are seeing a lot of traction, which is there on the private sector. Last quarter itself, we added close to about 1,000 crores of new order books. And this in the next 3 to 6 months, we expect railway to come out with sizable tenders. So from what we understand, that railway of the current design of wagons which railway is currently procuring, there's a tender due for about close to 40,000 odd wagons. And on top of that, there is also a global tender which are new design wagons, and which we expect a tender of close to about 10,000 odd wagons, and where Jupiter has a pre a strong position because of a partnership with Tata Wagonka. They are also a promoter in Jupiter wagons, and they are today the leading manufacturers of freight cars in Europe.
Okay, absolutely, Mr. Loya and Tanya this side. Very good morning. And first of all, many congratulations for the bumper set of numbers. You talked about order book, and Shail just mentioned about the numbers as well. Top line and bottom line growth. I mean, fantastic numbers. Revenue also jumped 155%. So, what really led to this kind of growth, and how do plan to sustain this kind of growth going forward?
Okay. Morning, Tanya. So as I have been telling earlier, that this growth was anticipated because the government today is clearly focused on infrastructure, and for the first time, I think after large many number of years, we are seeing a lot of private capital coming into capital goods into infrastructure. So I think that itself also has its own momentum. And there is a sizable tailwind now which is there in this sector. And we don't see any letdown happening in the next at least 3 to 4 years, because the kind of capacities which are going to be building up, and the focus of the government on infrastructure is very clear. And as I have mentioned earlier, that railway is the only instrument through which you can bring India at par with the global economy in terms of a logistics cost. And unless your logistics costs are in control, you cannot strive to become a much larger economy. And on top of that, what besides, wagon is just one part of our portfolio. What we have also added is now the braking system business in Jupiter. We have very strong global partnerships. We are partnered with companies like Daco, with Covis, who are leading manufacturers of brake systems in Europe. Plus, recently the company has acquired Stone India, which was a legacy brake system manufacturer in India. Through NCLT, we acquired this company, and this in turn will help us strengthen our position in the braking business on the freight side. So we will, for the first time in this space, we will be the only manufacturers of wagons who will have our own braking systems. Thus, it will give us sizable backward integration plus strength to grow much further in future.
Okay, absolutely, Mr. Loya. And let's talk about margins as well. So, operating margin expanded to 12.85% in this quarter, in the June quarter, as compared to 10.17% a year ago. So, of course, it is because of improved product mix and in the introduction of value-added products. But how do you plan to sustain these kind of margins? And what's your outlook, as far as FY24 is concerned?
So I've been very clear that the margins which we are currently having are very sustainable kind of margins. But obviously in this industry you cannot expect margins in higher double digits. So I think any kind of margins between a 12 to 13% kind of margins is given the quality of our order book. And as I mentioned earlier, our focus is more on the private sector order book. And if you look at today, our order book position, about 60% of our order book is more on the private side rather than the railway order books, which are more generic wagons. Whereas on the private side, you have to do much more newer designs of wagons, which are much more complicated. So definitely the margins are much higher on that side. And plus the new age businesses which we are adding, that further helps us strengthen our margins. And as and when these businesses now will start contributing more and more over the next 3 4 quarters, you will see the impact of margins coming in from these businesses.
Yeah.
Besides that, recently we have got into a MOU with rights for exports of wagon to the global market, and we are very bullish on that business also. in two tenders with the Mozambique Railway as well as with the Zimbabwe Railway. We are already L1 on those tenders, and we expect some order books from there very shortly. So I think that will again add to our overall portfolio and to our margins.
So, Tanya, talking about margins at about trailing 12-month EBIT, I'm talking about is 11.61% for Jupiter Wagons, and it is higher by 350 basis points if you look at the average peer margin
Hmm.
over Jupiter's rivals. Mr. Lohia, let's try and understand how the business of railways has changed. I ask this question as a skeptic. uh, Mostly stock prices rise when investors or potential investors and traders see an underlying change happening in the industry, and especially the main buyer. In this case, a public sector enterprise, which is the railways. Have you noticed any improvements? Have your inventory days come down? Have your payment schedules improved? Of course, the order flow is there, but orders with backlogs of payments are something that markets are really afraid of, money being stuck in working capital or inventory. What has been your experience over the last 2 years? Has there been any improvement at all, or are only we looking at things differently?
Okay, yeah, it's a very good question. So, one thing about Indian Railways, especially on their procurement of rolling stock, that Indian Railways is, I would say, is one of the best paymasters. So if you look at our balance sheet and if you look at our debtor cycle, it is less than a month, because typically in about 2 to 3 weeks of the supply of wagons, we get our payments from Eastern or from Indian Railways. And besides that, on the inventory side, we are uh, pretty much protected against the commodity cycles, because as you are aware that wagon steel is a major raw material input for us. But however, we have a escalation and a de-escalation contract formula built in all our contracts. So that also isolates ourselves, the industry, against any kind of major price variations which happen. So I think given the strong payment cycle which railway follows, as well as the protection we get on the inventory side. So that part of the business I don't see to be a challenge. It is the bigger challenges I think right now is on growing our infrastructure and catering to the demand which is now coming in.
Right. Mr. Loya, our final question to you. Uh, you have a debt of somewhere like sub 200 crore rupees on your balance sheet. Uh, like I said, possibly the best time that's there for the company's balance sheet and the business plans that you have over the next 5 years, ever since you were established in 1979. Any plans for reducing this debt, or maybe taking higher debt to fund further capacity expansion?
So if you look at our debt numbers, today we are a net debt free company, and most of the we don't have any long term debt. So most of the debt which you are seeing is on the working capital side, and our current ratios are also pretty strong. It's 1.6 plus. So debt for us today is not a challenge if you look at. And given the fact that we have such strong cash flows, so in the existing business, even with the expansions which we have in mind, we don't see any requirement in terms of further debt. Yes, but again, we are looking to consolidate the business further. We are looking at more backward integration opportunities. So as and when these kind of opportunities come in, definitely the company may go in for some long-term debts.
Okay, absolutely. And on that wonderful note, thank you so much, Mr. Loya, for taking the time out and sharing these wonderful insights with us and being with us here on Business Today Television. And all the very best for the coming quarters as well.
Yeah, thank you, thank you.
Okay, let's get back to the markets. And we are still in the red. And the good news is that Nifty is I'm so sorry. Nifty is above that 19,500 mark, and Sensex, if you see, it's down to the tune of 260 points as we speak. Of course, it's the stock specific action that is taking place. Dr. Reddy's from the Pharma pack, the top gainer for you, 3% uptick there, and Coal India Adani Ports on the set of on the back of Q1 earnings. These stocks are also among the top gainers. What's not supporting? DV's lap. The stock is down over 1%. The top gainer, top loser for you, and Hero MotoCorp and HCL Tech. Some of the IT counters not really supporting the markets at this point in time. Shail. Shail, I think it's a stock specific action that is taking place at this point in time.
Oh, there's so many, Tanya. I can go on and on. There's a breakout happening on JSW Energy 30130, and where Shali was just with us a while ago. She was feeling a bit sorry for the chemical space, but Deepak Nitrite taking it away, 2120 days high. Lots of action in Aurobindo Pharma. Remember, it was a big multi-month high, multi-year high on Aurobindo Pharma. 884.50. Dr. Reddy's fresh record high 58.50, and of course Friday is approaching. Therefore, PVR Inox is moving up 1636 days high. All that and more is what is likely to happen on BTTV. Stick around with us. The Nifty down 60 and the Nifty Bank down 236 as far as the broader markets are concerned. The index is concerned, but a lot of action happening piecemeal individual stocks. Tanya.
Absolutely, Shail, and as always, thank you so much for sharing, excellent data and being with us here on Business Today Television. And you don't have to go away, and don't forget to follow us on, our social media platform. Don't forget to, share your feedback, your queries with us. So stay tuned for all the latest market updates, and many thanks for watching.
How about